Hello guys and gals, welcome back to the channel. Yes, here at Barry Charles, we learn the best in finance. In today's video, we're going to look at Graham Stephan. Yes, old Graham Stephan. How does he invest and what percentage does he invest in with his money? And where he's looking at in 2023 to invest his money. So we'll have a look if we think it's right or wrong. We'll see if you make your own decision on what you think his investing strategy is. To the flash cars, the index fund, and so much more. What do you think of it? Remember to subscribe to the channel and slam dunk into the like button, because you are the best and you will get flash cars guaranteed, no pun intended. I hope you get great entertainment out of this video. Now let's get to it. Graham Stephan right here, right now. Yes, Graham Stephan started as a real estate agent who built up a portfolio of 7 houses, and mainly all in the one area. He decided he should start investing into index funds and equity markets for diversity. He also looked at alternative assets as well as cryptocurrency for the long term. He also, when he talked about his alternative assets, he was talking about his Ford GT and his Tesla Roadster, which I was shocked later on to see that it's actually quite profitable, but I don't know if it will be long term as the price gets cut. But his Ford GT, definitely a good investment. Any other investing into American muscle cars, I think you can't really go wrong with if you can get them for a good price on discount to resell them later. Definitely a good money investment there. He also had a small deposit of 3% of his net worth in cryptocurrencies, Bitcoin and Ethereum, but he also had Dogecoin and others. But I'm pretty sure he's lying about this 3%. I'm pretty sure the way he was talking about it for months and months about crypto, that he had more invested in there. And look at the failure of millennial money. Prime example of that. But in saying that, with crypto, I believe it's a good buying opportunity if you're brave enough to take the risk, because who knows, Bitcoin can still go to $250,000, $500,000 in the future. Don't quote me on that, but there's a big opportunity. It could go to the moon. But the question mark you have to decide, is it going to be the future of crypto? Is it where people are going to invest their money as a store of value or not? And also recently he has started to buy into treasury bonds and money market. So let's have a look at the breakdown of his portfolio. 35% is in real estate, residential. 35% is into equities and index funds. 22% is in the money market fund. 4% in alternative investments. 3% in Bitcoin and Ethereum, and I don't know what the other is, but 1% other, which he doesn't explain in the video. So interesting what's happening there. For most people that have a 10 to 15 year, in the last 10 to 15 years, have not seen a market crash. Now, and people will be going, easy money. We can all make money out of the stock market, no doubt about it. Easy money. But that is not the case for the people that have been in there long term. If you invested if you started investing, especially in the last 5 years, you've seen your money just keep going up and up and up and up. And then you thought, oh, nothing can go wrong. I'll buy it Beyond Meat at $234 and watch it crash to $12. That's an extreme example, but that tells you what can happen in the stock market if you went all in at $234, which I'm telling you now, there will be people that would have. So a lot of people have seen their portfolios crash 40, 50%, and if you're real bad, 80, 90%. But that doesn't mean not to keep investing. What do I think of his strategy? So basically, to let you know, so he invests in individual stocks, index funds, and international markets. Now, on the way he's investing, I think it's going to give you average stock return. If you want greater returns, you have to be more risk tolerant. I would say my strategy would be 70% growth, 20% risk, and 10% dividend. Just to give you an idea, a solid company would be Apple or Facebook, would be the established business. Then if you want to get risk adverse, Airbnb and Palantir would be risk adverse for high potential gain. And then dividend investments, I'm looking for ones that are paying you 10%, so you can spend that 10% and put it back into the stock market. And that would be like NLI, dividends, REITs. That'll be ones you'll be looking at for that sort of return. But I expect this portfolio could get a 20% in terms of dividends over time, because if you don't have money, dividends is a good way to gain more wealth. Looking at his real estate investments, he's looking at going into commercial real estate in 2023, which I think is an interesting one. Looking at office or retail space, I think it would be a good move if you think that if you're going to work in your office in there and have other people paying your rent, having like other spaces, if it's big enough down below, other people paying you rent, to really make it, to me, worth investing. I think, because if you just buy it and then hope someone to rent it out, there's no guarantee, especially with the market going into a recession. You could be stuck on this property for a year or so. But you can definitely get good buys in the commercial real estate at the moment, so no doubt it wouldn't be a bad decision. But you've got to be able to afford to pay all the money if you can't afford. Yeah, if you're not getting anyone giving you rent, that's the question mark there. Also, he's looking at alternative assets, of his 4GT going up 30% and his Tesla going up 20%. We also thinks watches is an option for you. This is a space I like, the buying and selling concept. But it often takes a bit of time, and you're better off to probably start a business and start buying and selling and have other people running the business. And I think that's where, and you just look over the business as it goes along. He also thinks he'll keep his crypto stuff, but whether or not he invests more into it, that's going to be a question going over the long term. But where I just don't make any sense to me is 22% in treasury bonds and money markets. To me, I think you can make better money elsewhere, whether that's in the dividend investing or solid growth stocks. That's where I'd go instead of the treasury bonds. It just seems like a waste of money for me. You probably better even look at gold and silver as an option. That's enough for me in terms of Graham Stephan's investing strategy. So what do you think about this? And do you think, from being the same with real estate and stocks at 70% of his portfolio, do you think 22% in bonds is too risk not adverse, and a little bit in crypto isn't enough in crypto? Some people would say 10-20% would be better. Some people would say no crypto at all. Alternative assets, has he got enough in alternative assets there? He doesn't really talk much about a business, so should business be inside of this as well? Anyway, that is Graham Stephan's investing strategies. I hope you've enjoyed the video. Remember to smash the like button and join us again for another video soon here at Barry Charles.